Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 25th of October. The dollar index hit its highest level since early February. The dollar edged higher against a basket of major currencies on growing expectations of a Fed rate hike by year-end. This could be due to strong U.S. manufacturing data and comments from Chicago Fed President Charles Evans that the Fed could raise rates 3 times between now and end 2017. Evans' comments built on remarks from Fed Williams and Dudley last week, both of whom hinted a near-term increase in interest rates. That said, we continue to monitor incoming data and Fed speakers as gauge on whether the Fed is well on track to push the hike button in December, keeping rate differentials in favor of the dollar. Expectations for stronger data, such as the third quarter GDP released on Friday, should provide a boost to the shorter end of the yield curve, we believe, and prove bullish for the dollar. In Canada, answering questions in Parliament, Bank of Canada Governor Poloz accidentally tempered expectations for further interest rate cuts. He noted that our best plan right now is to wait for the next 18 months or so. The market interpreted this as monetary policy guidance and that interest rates are likely to stay on hold for the next 18 months. The loonie surged on the statement but quickly gave back a large portion of its gains as soon as the governor clarified that his statement concerning the need to wait 18 months was in reference to the time frame over which the output gap is expected to close, as noted in the bank's October monetary policy report. It was not intended as a reference to the bank's monetary policy. Following the Bank of Canada policing decision last Wednesday, Poloz retreated that policymakers actively discussed the possibility of cutting interest rates, something that would bring the bank closer to unconventional measures. Governor Poloz's latest comments makes us believe that nothing has changed with regards to monetary policy. As a result, we maintain our bearish view on the loonie and we expect it to resume its prevailing downtrend in the near future. As for today, during the European day, we get Germany's IFO survey for October. The current condition index is forecast to have risen, while the expectations figure is expected to have remained unchanged. Improving sentiment overall is also supported by the ZEW survey for the month, where the expectations index gained 5.7 points to 6.2, its highest level since June. The current assessment index rose as well. This makes us believe that the improved economic sentiment in Eurozone's growth engine is a reflection of upbeat current economic activity. Coming on top of the positive surprises in the BoC's PMIs for October, further improvement in Euro area's economic data will be good news for the ECB and may confirm our view that nothing bigger than just extending the QE program is on the cards at the December meeting. From the US, we get the S&P Case-Shiller House Price Index for August and the Conference Board Consumer Confidence Index for October, though neither of these is usually a major market mover. We have 2 speakers on today's agenda, ECB President Mario Draghi and Atlanta Fed President Dennis Lockhart. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.